What's up, guys? It's October 2nd, 2025. Had a training range day today. Pulling back from yesterday's rally. We are at all-time highs. We got the weekly chart on the left and the daily chart on the right. Look at that. 1, 2, 3, 4, 5, 6 bull bars in a row, but there's a trend line break here. So you could say the bull spike starts down here, rallies, pulls back, and then caught that second leg. Bulls met the minimum objective for this second leg, which is one tick above here. And they got that yesterday and definitely today. Yeah, today was a training range, and we have the training range bar on the daily chart. Tail, bull body, and the overnight session looks like it's starting to rally. Pretty cool times. We are earlier today we were at all-time highs, which was the open, and then it sold off and went sideways for the rest of the day. Pretty nice sell. I didn't trade. I probably won't be able to trade until next week or the following week because of my schedule. But I was looking at this sell off. I was like, wow, 3 bars, 3 bear bars, good context. I don't know if I would have got filled. I would have to be like on the money with the order, and it had to be perfectly one tick below. But they want to pull back like 2. That worked. Breakout. Possibly reset the leg count, but you can see they start to go sideways. But leg 1 at the high of 4 pulls back to the low of 11. Rally, you get filled on 12. Bulls get out, break even, sells off. You hit their first target 1R on 13, and you could even hold for up to 2R. I think a loss I would have taken today. Oh wait, never mind. I was gonna say this trade here, but I didn't realize bar 26 hit the 1R. So there you go. The open has 3 winning trades to the downside, and the third one was climactic, 15 through 19, so be careful. Then we have a rally here. I do like the idea of rallies. You know what I was thinking about today, guys? The difference between counter trend and with trend, and time control versus price control. And this is just, I've learned these ideas from Ali Monasari, and I'm just kind of formulating my own idea here, but counter trend trades are price control. With trend trades are time control. So what I mean by that is the with trend is long, but at this moment in time for the open, the sells were working. Bears do control price, but they don't control time. And just take a look anywhere. Look, bears do. So okay, here we go. There's a bear leg. We have sell off, bears are controlling price, and now we're below. We have a bear, we break below the higher time frame EMA, it's bearish breakout. And then look at so now the with trend entry is bearish, and then look at the bull bars, 52, this rally, it's a pullback. They have control of price, but then we hit the EMA, sells off. So bears have control of time, so that becomes with trend. And then bull starts to get the breakout, and now look here. Bulls try and control the price, boom, sells off, we go sideways, bulls get the breakout, and now there you got control of time, and all the bear legs are just pullbacks. You could have actually traded this, so I guess we have to determine what is a trend day. Like, is this a bear trend day, or is this a bull day with a bearish pullback, which did ultimately we went sideways and it broke out. So I have to come up with a couple definitions for that, but that's just what I wanted to say. Give me 1 second here. Yeah, that's what I want to say. Is I was like, counter trend trades have price control, with trend trades have time control, and time control is stronger. It's important that we understand that. One thing I do is I get carried away with price control, like from 15 to 19. I would think we're gonna sell off all day, but in reality, it's a third leg down. It's climactic. The bears do control price, but bulls can have time control, which is important. There's 2 types of control, so keep that in mind. Think about it. Tell me what you guys think. Low of 39 to the high of 41. Bears short here, they get trapped, and they short higher here, they get out of break even. 1.5R and even 2Rs met. You can do it again for a smaller scalp. I don't think I would like this trade, but it did work. Bears short the low of 43. Oh, okay, yeah. So you get filled on 47. They short the higher 45. They short the high of 45, which is right around 42 resistance. Sells off. You get filled on 48 and the market rallies. Let's do it again. 48 to the high 51. And now again, we're coming to that third leg, so it's difficult. But the low of 49 to the high 51. Bear spike starts on 51, sells off, bears buy back shorts because they're trapped, and that causes a rally, but end of the day rally. Here we got it again. Or I don't actually know. Let's see. Bear bar 52. I mean, you would get filled. You could make a scalp, but it's the end of the day, and you don't actually hit the first target of 1R. So anyways, gap up, bar 1, bear bar has a tail, so bulls were willing to buy highs. And then bar 2 sells off. It rallies and sells off, so we know bulls are now trapped. There's a tail here. Leg 1, pull back leg 2, and then we have a climactic bar leg 3. We go sideways on the EMA. This ends up becoming a bear flag. You can see that bulls try to rally. Bar 4 is an inside bar. Bar 5 is an outside bar. That's interesting, inside to outside. So it's expanding. It's kind of like an expanding triangle. And then bar 6 is an inside bar. Bar 7 is an inside bar. So breakout mode for sure. And we got bullet in the box analogy. It's a bear flag. Bar 7 rallies and sells off. That's a good tail because it lets us know bulls are trapped. So bears, and it's closing on slow. You short here for a quick scalp and you'll make money on 9. Some bears will be willing to hold for a swing, thinking this is the start of a leg 1, pull back leg 2, and it was. From the high of 7 to the low of 13. No, we're gonna do the high of 8 because it's a trend line break. So the high of 8 to the low of 13 is a bear leg. It pulls back, kind of a deep pullback. I don't like how 14 looks for the bears because it's a bull bar closing on slow. But again, it's an inside bar, so that's breakout mode. And then we have a nice bear bar, 2-bar reversal bar, 15. Good follow through, 16. It's follow through, but it does have a tail. And then we have a nice bear bar closing on slow, small pullback, sell off on 18, and then a nice bear bar on 19. I can definitely see myself getting trapped around here, getting filled, and thinking we're going to tag the higher time frame EMA. But we've had a leg 1, pull back leg 2, pull back leg 3. Leg 3 is climactic. And now look at bar 22, or excuse me, bar 20. This is not good for the bears. When we see pullbacks, we want to see trading range bars. This is a trend bar, so something's going on. And this has a little more context to it because of yesterday's rally. So if we had a trend bar like this, and well, we did. Look, see, look at 30, 35. We have a nice trend bar, bull bar, but it's in a bear regime. This is a bull bar in a bull regime after a bull trend. So looks the same, context is different. Good fall through 30. 1 second. I think I'm starting to get sick. I have to keep clearing my throat. We have a gap breaking around the breakout on the EMA, breaking around resistance, and then it pulls back 30, 31, 32. You could get filled short around 32's low or maybe 39. Let's count these bear legs real quick. I just noticed that. Leg 1, pull back leg 2, pull back leg 3. Wedge bottom testing, bar 28's high, starts to rally. Could catch that scalp. And then 41, bull bar closing on its high. Bad follow through 42. Actually an inside bar, so it's okay. I think when you see the inside bar, it's good to get out longs. Because you're risking 3 pushes up and it sells off. And I think that's what trap bears on 43. And then as you can see, we have another inside bar, 44. How many inside bars do we have today? Wow, lots of inside bars. The reason I have that is because I'm just tracking what happens after inside bars and late legs. So no inside bars down here. Interesting. Inside bar broke out. Inside bar yesterday in a late leg. But yeah, I'm just tracking something. Anyways, bears see 43. They get short and now they're trapped, forced to buy back shorts. Some bears will scale in and they get out a break even around the 46, 47 tails. Market starts to rally. Could argue the same thing. Bears see 46, think it's a lower high. They short down here. Market rallies up until, excuse me, they short 46. Market rallies 48. They short the high. Wow, excuse me, times 3. Bears short bar 46. They see the market rally 47. They short higher on 47. They get out a break even on 47, 49. Causes another rally, 3-bar rally. First within bars 49 to bars 52. Bar 52 is the first pullback, and it actually worked out as a better fade. And if you're going to take that fade, buying the close of 52, that's a very quick scalp because it's not actually the first reversal. It's the first reversal within this structure, but it's not the first reversal. The first reversal was right around here. So, but in this situation, good context, it did work out for a scalp. market rallies, climactic rally, just how this was the nicest rally. Bulls had the nicest rally here, and then we went sideways for the rest of the day. So that's about 10 minutes, guys. Thank you for your time. I hope you had a good one. Hope you guys learned something. Please leave any questions in the comments, and let me know if you want to invite to the Discord. Thank you for your time, everyone. Good night.